Hello, chart watchers and Decision Point faithful. Welcome to this Monday, December 6th, 2021 episode of Decision Point. My name's Erin Swenlin from DecisionPoint.com, and I'm here with my father, Carl Swenlin. How's everything going for you today on this lovely Monday?
It's doing pretty well.
Yeah, it's been kind of a crazy market. I'm sure we have a lot of viewers that are dying to know your thoughts on what's been going on right now. But here's our agenda. So let me just get right into that. So we will do the SPY and indicator overview. We have it set up. Carl does that. And then I'll take over and we'll look at the sector CandleGlance so we can see all of the sectors on one page and get a really good sense of the direction of the market based on those sectors. Then I had somebody ask me about the put-call ratio in this morning's free trading room. So I thought it would be really interesting to look at some of those charts. I was finding them pretty interesting when I pulled them up. I hadn't looked at them in a long time. So I'll be interested to hear your comments on them, Dad.
Okay.
And then we'll finish off with the diamonds of the week. I have an industry group that I've been watching, and I mentioned it to diamond subscribers on Friday, but we've been talking about this industry group for a little while. So I will reveal what that industry group is at the end of the program and give you my diamonds of the week, the stocks within that group that I think look really interesting right now. So before I get started, though, we have our holiday special. We've let our Cyber Monday fly out and continue through the holiday season up through December 21st. So if you buy any month of any subscription on DecisionPoint.com, you will get a free month. So you will not be renewed for an extra month. You don't need a coupon code, just subscribe and we will set that up for you. And you can enjoy 2 months of Decision Point for the price of 1. And then I did mention that I do that free trading room on Mondays from noon to 1 Eastern. It's every week, it's free. If you go to our homepage, you'll find the link to sign up for that if you haven't already. I do send out the recordings to all of you who are on our free email list. So if you're not on that, recommend that you sign up for that as well on our homepage. But let's get started. And Dad, you mentioned to me, I just had to update this chart. We did get a new neutral signal.
Yes, and we almost got a signal change on gold, which I'll cover, but yeah, there are a couple other sectors that are getting close.
All right, that will work out. We will show those in the CandleGlance, so I'm sure that will be really interesting to folks. All right, let us move forward and go look at some charts. So you are on.
Okay. You know, when you have a market as choppy as what we've had in the last couple of weeks, it just shows you how valuable charts are. I mean, it gives you context. And in spite of all this chopping up and down, we've got this cluster right here that certainly represents a slug of resistance or support, whichever way you're happening to look at it. The VIX, let me take a look at the VIX. I pulled up a 2-year chart of the VIX, and this is just a linear scale, but it's still reversed, but showing you how scared people got as of Friday, and comparing that going back, and it's the lowest we've had since January.
Quite oversold.
Yes. And yes, we're oversold for the VIX. Notice we got very high volume today, still shrinking from the high volume spike of a week ago. Advanced decline lines, they're ticking upward as we would expect that they would do. So there's no divergences there. New highs and lows. We're getting new highs expanding again, and new lows are at 0 today. This is a chart for just the S&P 500 stocks, just in case you didn't know that.
Mm-hmm.
The Silver Cross Index for the large cap, mid cap, and small cap stocks. We have 60% in the silver crosses in the S&P 500, and that means we have about 40% of the stocks in the S&P 500 that are correcting. And about 51% in the silver crosses for the mid cap. That means 49% are correcting. And again, here we have 51% in the small cap. The climax assessment, we did get another climax today. We're starting to get kind of dense with climaxes. On last Thursday, we had an upside initiation climax. The following day, it really wasn't close, except for we had a high volume day on Friday, but we didn't have, it was not a climax day. Today we have very high breadth numbers, and up down volume ratio is above the limit for the S&P 500. So it's an upside climax. I'm calling it an upside exhaustion climax, because we had an initiation, and you don't have an initiation following the same signal. So with it being an exhaustion climax, we could expect some churning.
Yeah, I was wondering if we were going to get another climax day.
Yeah, it pretty much looked like it.
Yeah, I've been pointing because you're right, it's getting very dense right now. And I've been pointing everybody back to September with all of those climaxes. And you can see even at the end of August, I mean, when things start to get volatile, we're going to see a lot more. And unfortunately, that means more volatility. That means, as you were saying, churn, you know, and kind of directionless, really.
Yeah, and as of Friday, I thought, you know, we have to decide for this poll we do for Mark, whether it's an upside, I'm sorry, whether it's going to be a bullish week, bearish week, or neutral. And I decided on neutral because with that reversal we had, it wasn't complete reversal, but it really abated in the end of the day on Friday. And I thought, yeah, we're probably due for, we had the initiation, so we're due for some upside next week. So I don't think that it's necessarily going to make new all-time highs, but I think we have some exposure to the upside.
So despite that climax being called an exhaustion, an upside exhaustion, you're not looking for prices to fly lower.
No.
Okay. I'm pumping you for information before I write my DP alert later. So.
The bias assessment, we still have awfully low for the Silver Cross, and we're awfully close to new all-time highs for the price. So also we have the stocks above the 20 and the 50 are really low, only 38% for the 50% stocks above the 50%. So I think we're still have a bearish bias.
I definitely agree. And we saw it turn down today. There were fewer stocks with price above their 50.
That's not updated yet. Remember.
Oh, right. Got it.
Our short-term indicators. The STO B and V, that's for breadth and volume, that's contracting as it should be, and we have it actually started contracting before the low last week. So that is bullish short term, and they have been very oversold. So there's a good chance we'll see some short term some continued short term upside.
Mm-hmm.
There's the intermediate term indicators, the ITBM and ITVM, and they're coming off relatively oversold readings, not really very deep at all compared to, say, a year, 2 years ago. But for the kind of market we've been having, yeah, it's oversold. So
it looks like they might have ticked upward today. It's hard to see.
I can do that.
Yeah.
Yeah, let me see. Yeah.
Oh.
Actually, the volume didn't.
Yeah.
It was on breadth.
Okay, so we're still mixed.
Yeah. Okay, Bitcoin. It had a real bad weekend. You know, these, I think these are 7 days a week. And this was, let's see, today, this was Saturday.
Mm-hmm.
So it was way down on Saturday and recovering. It's not above this rising trend line. So that's still resistance.
Mm-hmm. Yeah, it's struggling at that 200-day EMA as well.
And gold. You know, gold it's been moving sideways, and we've had some whipsaw signals. Right now, we came within 2/100ths of a point of going to a neutral signal. Actually, it would go to a sell signal, because last week we got a long-term sell signal. The 50 went below the 200 EMA, and so we're on a long-term sell, and we're close to an intermediate-term sell.
Does the picture look that bad to you, though? I mean,
no, it doesn't. No, it doesn't. It's sideways, and I would say slightly bullish, but it's just this saucer formation. We shouldn't have broken through that. We should have gone a little higher on the handle here, and not quite as low. So I think we still have a handle in progress, but it's really weak.
the
The dollar has been strong, which is not good for gold. And USO today was up 5.23%. So we've had it looks like we may have gotten the bottom for oil. Treasury bonds, they've been rallying, but today, pulling back, we've got the STO topping. PMO is still rising, but decelerating for sure. Here's the 10-year bond yield. That was down really badly on Friday, but it rebounded nicely today. Again, we're getting close to a bottom on the PMO, and the
stochastics, are turning up and oversold.
Yeah. And here's the picture of financials. it's just barely below the moving averages here, but it was like one thousandth of a percent below the
Oh, right.
the 50. It looks like, but it's as long as it stays below these averages, they're going to continue to move lower. And actually, I believe that's.
Yeah. What do you think of the participation underneath? Because I mean, the PMO is oversold and it wants to turn up. I don't know. I mean, I don't like the picture right now, but I'm just curious your thoughts.
It'll be interesting to see what happened today, but yeah, let's see, the Silver Cross, it's at 60%, and Golden Cross at 95. Well, that's not so bad, really. Mm-hmm. That's actually pretty good. Mm-hmm. So with a short term, we got the 20 and the 50 down low, and they'll probably tick up today, but still, it's drifting down, and the trend is down right now.
Mm-hmm. All right.
And you may have it.
I shall grab it. Okay. So I wanted to look at the sector CandleGlance, which has all of a sudden disappeared on me. Not a problem. There we go. So I like to keep an eye on this sector CandleGlance. I've set up my own CandleGlance style so that I have a 6-month chart with the 20, 50, 200-day EMAs and our PMO. And I keep close eye on this because we can see the price patterns. We can get a feel for, what's happening with the signals. And, when we looked at this last Monday, it was a pretty ugly picture. Everything was pretty much, you can see all these PMOs had been topping. You had very ominous topping formations. You have that double top on XLY. But now we are starting to see, for example, on XLI, a big drop, but now getting the bounce off the 200. We can see that the PMO, although moving negative, is trying to turn back up. And you can see that XLRE, same thing, PMO trying to turn up. It's now struggling against overhead resistance, but looking a little bit better. And then we already looked at financials, and that PMO is trying to make its way back up. So, when we look at this, XLC totally beat down. I know that a lot of bargain hunters are really starting to focus in on that sector. I wouldn't feel good about this sector at this point. I'm still, especially with the market having all this weakness, that would probably not be where I'd go fishing. But Staples has a really interesting turn on its PMO, as does utilities. So I found these pretty interesting, going into this week as a place to, sectors to watch. So we're starting to see those turning around. If we look over here, like I said, XLF, I notice XLV is getting very close to a dark cross of the 20 and the 50-day EMAs. So that could be interesting. And we do have what looks like a double top here forming on healthcare. So, it's still, the picture isn't as bleak, I think, as it was last week, but I don't think that it's all that bullish either. Do you have any thoughts?
Yes, technology. That's when worth looking at. It's trending downward, and it doesn't like it, but it is. And which is unusual considering
it's full of growth stocks,
right? It's really usually the strongest, and it's not now.
There's at least some hope here with the price landing on that 50-day EMA. So we'll have to keep an eye on it, but you can see the PMO is still not looking that great. And participation, has been trending down on this decline, but it hasn't sustained that much damage really when I look at this, but we'll see what those numbers look like after everything updates. All right, so sentiment charts, switching gears. So like I said, I had someone ask me in this morning's free trading room about the put call ratios. And so I brought up my handy dandy sentiment chart list. And I was looking at this chart and I was really, it just spoke to me in that you can see, if you look at these red vertical lines, these were major market tops, green are bottoms. And you can see that typically when we see that put call ratio top, that's when you're going to start seeing prices move lower. And conversely, you can see that when price bottoms, it's usually when we get a bottom on that put call ratio. Well, certainly now with it free falling downward, it's getting toward oversold. But at this point, I don't see the sentiment helping just yet. I think that we could see more bearish sentiment before we would look for a more intermediate term reversal. I don't know. What are your thoughts?
I think it's interesting that we have the 2020 bear market on there, and it shows you how bad it can get.
Yeah, exactly. So we may be getting into this oversold territory, but you know, people could get more bearish than they already are, which means the market will have to move a bit lower. Let's see, name exposure I thought was very interesting. Now these numbers come out on Thursdays. So this is as of last Thursday, but it had already been where we had the bad decline after the day after Thanksgiving. I was really kind of surprised when I looked at this and saw the exposure level is still pretty high. We really, to see the upswing, we need to see a lot less exposure. This tells me that the active money managers, this is the National Association of Active Investment Managers, so the big guys, and they tell us how exposed they are. And I found it very interesting that they were still exposed to the level they are.
Depending on Santa Claus.
Right. Right. It might be something that's in the back of everybody's mind there, but certainly they're not as bearish as I would have thought. And the last one I'm going to look at is our Rydex analysis. Don't pay that much close attention to it lately, but I do always find that Rydex ratio to be very interesting. Basically, we take all of the bear and money market funds, the Rydex funds. They don't call it that anymore, I don't believe, but we keep the name from when you develop these indicators. But the idea is that we track the assets in the bear and money market and divide that by the bull assets. And so, of course, the more bull assets, the smaller this number is going to get. And it's very small right now. So we have a lot of assets in those bullish funds versus what's in the bear and money market funds. And certainly we're seeing, some increase in those bear funds. But again, not to the degree we've seen previously. We just don't have that really bearish sentiment, I think, going on here. You would be surprised because everybody is, of course, running around, oh my gosh, this is such a big decline. But ultimately, this is one of those money where your mouth is sentiment indicators. And based on the money, they're not that bearish. We're just not seeing those funds up to the level we normally do. And that is keeping our Rydex ratio fairly small. Meaning it's going to be at the top of the chart. But I thought that one was pretty interesting as well. All right, moving along, we have about 4 minutes left, so I'm going to pop on into home builders. This is the industry group that I set up for my diamond readers to watch going into this week. And even though we'd had a pretty big pullback here on the industry group, it has broken back out again. And now we're above some of this overhead resistance from prior. We have a beautiful PMO bottom above the signal line, stochastics rising, and relative strength has been just great for this group against the SPY. My only concern is it is getting toward, relative highs here in its relative strength, but certainly could move higher up to the relative strength we were seeing back here in May. So I think that home builders are still really poised to continue higher. I don't know the fundamental reasons behind all of that, but we do have a technical bull flag on the chart, and now we are getting that nice big breakout. So that brings me to my diamonds of the week. And this one is one I presented on December 1st for my diamond subscribers. We had a rising trend channel and a breakout above that channel. So to me, that was a high sign of bullish activity, moving in a, breaking out of an already bullish formation. I thought was especially bullish. And you can see stochastics rising, just now starting to get above 80. PMO is looking very nice on HOV. I can't pronounce the name of the company. NAAIM, I think that's it. Anyway, you can see relative strength looking very good for HOV. But I also was looking at a few stocks that also came through, and Meritage Homes was one. We have that flag formation. We don't have the breakout yet above that high like we're seeing on the industry group chart, but I think that this one still looks pretty good. And Toll Brothers, I believe, was the other one. Yes, Toll Brothers looks especially strong. It's now overbought as far as that RSI is concerned, but overall, I think that there's still room for it to run higher. And again, a PMO bottom above the signal line is always especially bullish. Stochastics are right behind this move. OBV is rising. We also see the OBV made a higher high than it had over here back at that November top. So we avoided a negative divergence on this one. And then look at the relative strength. I mean, it's hard to beat. Seeing a group that is already doing so well, which I mentioned, home builders versus the SPY, really great outperformance. But you can see with Toll Brothers, we've even started to accelerate that outperformance. And even when it wasn't outperforming the group was still rising. And so that was positive. And as you can see, that shows you that it did perform well against the SPY. But that is it that I have for our diamonds of the week. That would be MTH, TOL, and HOV from the home builders industry group. I definitely think that's looking interesting. But, it has run. We are seeing some running up already on this. So we could get lucky and see a little bit of a pullback on some of these stocks and give us a really excellent entry. But I think it's definitely worth a watch at this point. And that is all we have for the Decision Point show. And we look forward to next week's show, but we will, after that, be going on a hiatus on the week of December 23rd, but we will have some great evergreen content for you. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.